Hello, I'm Catrina M. Craft, and you've just tuned into the Craft More Cash podcast, where finance meets innovation and strategy becomes reality. With over 2 decades navigating the twists and turns of accounting, tax, and business strategy, I've had the incredible opportunity to work with startups and Fortune 500 companies alike, crafting pathways for businesses to grow and thrive. I've tailored my expertise to serve the unique needs of industries ranging from real estate to creators to marketing and beyond. I'm on a mission to equip individuals with the financial savvy they need to succeed. Through my Wealth Intelligence course, I'm all about breaking down complex concepts into actionable strategies for business owners. Welcome to Craft More Cash. Let's make wealth building simple, fun, and effective. Ready to transform your financial journey?
I want to dive a little deeper into the home office deduction. We're going to talk about the internet, how you deduct the internet. So let's talk about internet deductions. If you do some work at home, and you're probably using your home internet, a lot of us do work from home, even if we have an office and we're using our home internet. So are your monthly internet expenses deductible? Well, I say maybe. They may be, but let me tell you why I'm saying maybe. The deduction rules depend on your choice of business entity. That's why I say it depends on what's going to be best for you as far as setting up your entity structure. The rules are different. A lot of times the rules can be different depending on the type of deduction. And this is one example. For internet deductions, you can deduct your use of your home internet, whether or not you claim the home office deduction. So that means, say if you don't have a specific, regularly and exclusively used home office, you may still be able to deduct your home internet. So let's talk about how to do that. If you are a Schedule C means that you're filing your business on a Schedule C as a part of your 1040 individual tax return, and you are a sole proprietorship. If you claim the home office deduction on your Form 1040, the internet expenses go on line 21, utilities, of this Form 8829, which is the home office. So I'm getting a little deep on you with the forms, but don't lose me. I'm not going to try to lose you in this details, but I just want you to know that this is where you would go in order to deduct. And I'm showing you that it really depends on the type of entity, which way you need to report. If you do not claim the home office deduction, enter the business portion of your internet expenses as utilities on line 24 of your Schedule C. Again, this is knowing your tax preparer needs to be knowledgeable to really know what's the best way to do it. If you have a home office, it's one way. If you don't claim the home office, it's another way. Don't lose that deduction just because you don't have a home office. If you are a partnership and operate as a partnership, you have to deduct the costs as unreimbursed partner expenses on your personal return, or you can get reimbursed tax-free from your partnership, but you got to have an accountability plan. So that's a whole nother tax strategy in itself on how to use accountable plans, which are plans which allow your business to reimburse employees and you as a partner for different expenses that you pay for that are business-related expenses. Now, if you are a corporation, there's a whole nother way. When you operate your business as a corporation, you're an employee of that corporation. Well, what happened is employee unreimbursed expenses are no longer deductible on your individual tax return. So the TCJA eliminated that for 2018 through 2025. Not sure if you're aware that this is the tax act that was signed right around Christmas time. I remember because I was sitting on the couch at Christmas and they passed this in 2017. And I was like, oh, I got to learn all the tax rules. I got to know so I can educate my clients. But in 2025, it ends. And all of this may go back. And we're just waiting now to find out with Biden's tax proposal if any of these deductions will come back. But right now, if you are an employee of a business, you cannot deduct unreimbursed employee expenses. Your company must reimburse, not must, but in order for it to be deducted, you as a corporation can reimburse yourself if you're an employee, and that's how it would be deducted. So your corporation reimburses you for the deduction in the case of reimbursed employee expenses. The corporation deducts it as a utility expense, and then you receive the reimbursement because you're an employee tax-free. So again, 3 different ways depending on what you are. And when I talk about corporation, I'm also talking about the S corporation. Internet deductions. You have to substantiate your home internet expense deduction. So where the business could run into trouble is if you are not showing that you're really using your home internet, and the IRS may question, okay, you're using this 100% for business, but we know you have the Disney Channel and your children may be using different streaming services. So ideally, you should try to keep track of your time. There are softwares that can track your internet usage, or you can just do it for a couple of months and then you extrapolate. You basically just say, this is my average, and I'm going to extrapolate for the rest of the year. So that's the internet deductions. A lot of people ask me, what business structure should I actually form? And it's always the answer, it depends. It needs to be customized to what you're trying to accomplish in your life, in your business. If you plan to sell the business, if you plan to pass it on to individuals or sell to partners, or just walk away and close it. So it really depends on the structure. Is what do you want to do with your business? How much money do you make in your business? What type of industry your business is in? So it all depends, and no answer is the right answer for everyone. It's really customized to what you are doing in your life. So why tax planning? Tax planning means looking forward to maximize your taxes, not just recording history. If you came to me with just a box of receipts and just said, okay, here's time for taxes, save me money, I would say, I'm sorry, I can't do it. It's really after the fact. We need to look forward to maximize your taxes. We need to look at the end of the year. I'm planning with my clients on what they're going to do in the year coming up. Tax planning happens before tax time. So that's very important to understand. And you must have some type of tax plan strategy so that you know where you're going and you have a map and a plan to get there. Let's talk about, can I take this business deduction? This is what I love to talk about because it is so broad. The IRS says that a business tax deduction can be taken if it's ordinary and necessary. So what does that mean, Catrina? Ordinary and necessary? Well, ordinary is common and accepted in your trade or business. That's why it's important to know what's in your business as far as deductions. What are other people doing? And it's ordinary. I say that you need to work with a tax preparer, an accountant, a financial advisor that understands your industry, because that's the only way they're going to know if it's ordinary in your business. Let's give you an example. If you had a person that is owning a junkyard and they had a dog protecting the junkyard, their dog could be a deduction because it's security. But as an accountant, I can't say that I'm deducting my dog because there's no reason for me to have a dog as a deduction. So that's why it depends on your industry and if it's ordinary in your business. But there was one fun tax case that passed, and there was a financial advisor that had records of his clients in his car, and he would travel around town with it. And he had a dog that would just sit in his car. The IRS allowed that dog as a deduction because he convinced the IRS that it was security and he needed to guard all of these private records. So that's why it is important to really work with someone that is looking at tax cases, looking at what has been ruled to be ordinary and necessary in your business and can guide you and provide you insight on those things. The next item about can I take this deduction is it necessary? So is it helpful and appropriate for your trade or business? Some things you may feel could be helpful, but if the IRS sees that no one else is doing it, that goes back to the ordinary, you would have to prove that it is very necessary in your industry, in your business. Something that would not be necessary would be if you took a trip and that same trip that you took to train on a certain subject, that exact same trip was in your hometown. So you then could not take an elaborate trip that's, Fiji Islands or some place, overseas to learn the same thing that you could learn in your hometown. So that's when the IRS looks, is it necessary? It also depends on the facts and circumstances. So each situation is going to be different. And that's why you need to make sure you're not asking your neighbor, you're not just Googling the answer, you're actually looking at your facts and your circumstances, and you're working with someone that could guide you through what's ordinary and necessary. The home office deduction is an allowed business deduction, but you have to have income if you're taking the ordinary way for home office tax deduction. Also, you have to meet any one of these requirements. It's a principal place of business. You regularly and exclusively use for administrative or management. You meet customers or clients at home, and you store inventory or products, or you use a separate structure. So when we talk about it has to be regularly and exclusively used, I'm going to give you an example. If you say you work from your kitchen table, but your children and maybe your spouse also, they are eating at that table, then that's not exclusive, because now you have a space that's also used for meals. It's not just used for business. So you do need to realize that it has to be exclusive use. But if you have a bedroom and half of the bedroom is only used for your desk, your supplies, your file cabinets, that is exclusive use for that area. So it is important to understand what regularly and exclusively means, because you could have a space, and as long as you're using only that space in that room, it could qualify as well. Also, we talked about storing your inventory and products. If you have a garage or a certain closet, that space could be home office tax deduction. Also, it depends on if you want to do the actual cost method, which would allow all of these different deductions: insurance, security system, utilities, internet, telephone, HOA dues, rents, or the simplified method. And this is a method that started in 2013 that allows a simplified method, so you don't have to keep track of all of those receipts and add up all of your expenses. You're just given a certain amount per square foot. Where do I go from here? Tax advisory services, a little higher investment, but in exchange, we work directly with you to grow your wealth over a period of a year or longer. So that's the plan, where I'm actually looking at your situation, developing, okay, you need a LLC, you need an S Corp. I'm going to look at your tax deductions. Okay, where are you missing? We may need to go back 3 years. So my investment, what I'm saying is an investment, could really be money in your pocket, because I'm going to save you money. Plus, we may go back some years and get you some money because you have losses in some years and gains in others.